Global financial markets faced turbulence as investors grappled with mounting concerns of a hard economic landing driven by persistently high interest rates. This apprehension has prompted a significant outflow of funds from equity markets, marking the largest stock outflows of the year, according to Bank of America. U.S. and European markets respond to hawkish Federal Reserve. U.S. equity futures experienced a mixed day, with modest gains offsetting the previous day's substantial losses on Wall Street. The jittery sentiment followed a hawkish stance from the Federal Reserve, which has intensified fears of a prolonged period of higher interest rates. Microsoft Corporation managed to edge higher in pre-market trading as its $69 billion acquisition of Activision Blizzard Incorporated moved closer to receiving approval from UK competition authorities. In Europe, the Stoxx 600 index dipped by 0.3%. Meanwhile, Adevinta ASA, a European classifieds company, made headlines by announcing it had received a takeover proposal from private equity investors, including Blackstone Incorporated and Permira. Euro area economy shows signs of weakness. Across the Eurozone, there were fresh indications of economic frailty, with private sector activity in both France and Germany continuing to contract in September. This prompted a decline in the value of the euro, though it later rebounded slightly. Central banks emphasize vigilance on inflation. Central banks worldwide have underscored their vigilance regarding inflation risks and cautioned investors against premature expectations of rate cuts. This increasing risk that monetary policy may inadvertently lead to a recession has prompted investors to offload stocks at a pace not seen since December. According to Bank of America, equity funds saw outflows totaling $16.9 billion during the week ending September 20, citing EPFR Global data. The bank strategists, led by Michael Hartnett, warned that persistently high interest rates could potentially trigger a hard economic landing in 2024, potentially resulting in significant market volatility. U.S. labor market strengthens, but uncertainty persists. In the United States, despite concerns about higher interest rates, fresh labor market data showed resilience. Applications for unemployment benefits fell to their lowest level since January, suggesting ongoing strength in the job market. Dollar steady, Treasury yields hit 2007 high. The Bloomberg Dollar Index remained relatively stable. Meanwhile, Treasury yields showed minimal movement after the 10-year note rate touched 4.5%, its highest level since 2007. This surge in yields was driven by robust labor data. Bank of Japan holds steady. The Bank of Japan opted to keep its interest rates, 10-year yield target, and forward guidance unchanged. The central bank reiterated its belief that inflation is decelerating. Asian markets react to policy expectations. In Asian stock trading, an initial decline in regional equity indexes was reversed. Chinese shares rallied, with market analysts suggesting that this move reflected short covering on expectations of additional policy support measures over the weekend. Oil prices and natural gas market. Oil prices saw an uptick, partly supported by Russia's decision to ban exports of diesel-type fuel and gasoline. Conversely, European natural gas prices fell as Chevron Corporation and labor unions in Australia reached an agreement to end strikes at major export plants that had disrupted the market for more than a month. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. The Japanese yen struggled to garner demand on Friday as market participants digested the Bank of Japan's BOJ policy announcements. The central bank opted to keep its monetary policy settings unchanged during its September meeting, maintaining the key rate at -0.1% and the 10-year Japanese government bond yield target at 0%. BOJ Governor Kazuo Ueda, speaking in the post-meeting press conference, expressed uncertainty about when the bank could achieve its 2% inflation target and end its negative interest rate policy. Ueda emphasized that any policy change would only be considered when 2% inflation comes into sight. As a result of the BOJ's decision, the US dollar to Japanese yen currency pair extended its rally, reaching its highest level since November 2022, trading near 148.50. Currency market overview. Here is a summary of the percentage changes of the Japanese yen, JPY, against major currencies today. USD, plus 0.37%. EUR, minus 0.37%. GBP, minus 0.30%. CAD, minus 0.04%. AUD, minus 0.17%. NZD, minus 0.09%. CHF, plus 0.15%. Among these, the Japanese yen was weakest against the Australian dollar, with a decline of 0.62%. These fluctuations can be seen in the heat map, displaying percentage changes of major currencies against each other. Global market highlights. Pound sterling to US dollar fell below 1.2300 for the first time since March following the Bank of England's decision to leave interest rates unchanged at 5.25%, defying market expectations of a rate hike. UK retail sales also disappointed, declining 1.4% year-on-year in August. In Australia, the S&P Global Manufacturing PMI slipped to 48.2 from 49.6, while the services PMI improved to 50.5 from 47.8, indicating expansion in the service sector. Australian dollar to US dollar edged higher in response and stabilized above 0.6400. Euro to US dollar remained near 1.0650 after closing virtually unchanged on Thursday. Despite Germany's manufacturing PMI improving to 39.8 in August, and the services PMI rising to 49.8, the euro struggled to gain traction. Gold prices dipped below $1,920 on Thursday but rebounded early Friday, climbing toward $1,930. This recovery was supported by a retreat in the 10-year U.S. Treasury bond yield. Upcoming events. Later in the day, S&P Global will release preliminary September manufacturing and services PMI surveys for the euro area, the UK, and the US. Additionally, retail sales data from Canada and comments from central bank officials will be closely watched by market participants as the week draws to a close.